Hello, and welcome to today's webinar sponsored by the HIBAR Research Alliance, also known as the HRA. I'm Scott Slovic from the University of Idaho, and I'll moderate today's one-hour event. This is the 9th event in our series of webinars for researchers, research administrators, and others who are interested in highly integrative, basic and responsive research, or HIBAR. The HRA website describes many of the activities of this organization, and recordings of all of our webinars, as well as abbreviated summaries of the key messages, are posted at www.hibar/research.org. A recording of today's webinar will also soon appear on the HRA website. I'd like to encourage interested attendees to visit the website and consider joining our mailing list to receive occasional updates about important meetings and other events relevant to HIBAR research. Before our featured presentation by Dr. Howard Kunreuther, I would like to explain the structure of today's webinar. We'll begin with a quick overview of the HIBAR research concept by Dr. Lauren Whitehead, the director of the HRA. Next, Dr. Kunreuther will speak for approximately 25 minutes about his research with a variety of collaborators from multiple disciplines to help society better manage low probability, high consequence events related to technological and natural hazards. We'll then have 20 minutes or so for Q&A, followed by an opportunity for Dr. Kunreuther to offer his final takeaways. Now let's get started. Dr. Lauren Whitehead is a professor in the Department of Physics and Astronomy at the University of British Columbia. He'll offer a brief introduction to the concept of HIBAR and to the HRA before we turn to our featured presentation.
Well, thanks very much, Scott, and hello, everyone. It's very nice to be here today. I'm going to be quite brief. The only purpose of my few words, as Scott has said, is that we hope and believe there will be people in the room today who haven't been in previous discussions. So I'll just provide a little bit of context here. And I'm just going to open my screen. So I'm going to quickly answer just these two questions. What is HIBAR research, and what is the HIBAR Research Alliance? On the first question, first of all, I should say that HIBAR is a simple acronym. It stands for the words highly integrative, basic, and responsive. And you'll see why in just a moment. The research itself, which is the important part, is a long valued form of powerful research projects that are intended to create new knowledge and solve societal problems. So that's one important duality. But also equally important is the duality of being jointly led by academic and societal experts. So those two dualities together are very important. And I think they're important enough to deserve a few images. So I'm going to show a couple of slides here just to help you picture this. So think of this as a Venn diagram where any given research project would be a point somewhere in this chart. And so if you were inside the sort of purple zone described by as discovery orientation there, that would mean your basic research. Whereas if you were intending to solve a problem in society, well, that would put you in the public impact camp. And where those two colors overlap, they produce a gray zone in the center. And that's the zone that we would call basic and responsive. So projects that are in that zone would have that duality. But the other lens that I previously mentioned is the one of who's making things happen. So in this case, the duality of having both academic leadership and societal leadership, and we use the word leadership very vaguely. There can be all kinds of forms of leadership, but that duality of leadership, portrayed by the gray zone on the left, is also very important, and we call that being highly integrative. And so together, highly integrative, basic, and responsive, the intersection point of all of those ideas is in the center of the diagram. And that's where HIBAR research projects lie. So naturally, most projects at universities, for example, are not HIBAR research. That's what you would expect. That doesn't mean they're not wonderful research, but we think some are, and perhaps more should be. So that brings up the question of what is the HIBAR Research Alliance and its mission. So the Alliance, HRA, is a distributed network of experienced volunteers who are well organized and united in their support of HIBAR research. And so their aim is to help universities increase the prevalence of university HIBAR research from, we think, about one project in 20 today to about 1 in 5 by the end of the decade, while also improving all types of research. And that's not a vague hope. We know that HIBAR research is excellent basic research. So if we increase HIBAR research, basic research is improved, and we believe there will also be far more benefits for society. So our goal is to help universities do what they would like to do, to respond more effectively to societal needs, while also increasing the excellence of their fundamental research. So now I'm just so pleased to have Dr. Kunreuther here today, and his talk, we know, will be wonderful. And in particular, it very clearly points out these 4 things that I've just mentioned, and I'll just list them very briefly, and you can be listening for them as we move ahead. Discovery orientation, it's very clear that this research delves deeply into fundamental principles of psychology and economics. In terms of public impact, it's clearly working on long-term solutions with a goal of lasting improvements for human benefits. So clearly those boxes are checked. Societal co-leadership, in addition to the academic excellence, which I'll mention in just a moment, the work is really closely connected with experts in society who bring a different lens to so many important things. And this includes insurance providers and FEMA. So clearly, that's a critical aspect of the research. And then the excellence itself of the research personnel. We'll hear more about Howard in just a moment, but it's clear that this project is really significant from that perspective as well. So it's hard, for me at least, to imagine a project that better embodies all the characteristics of HIBAR. And it's just such a pleasure to have Dr. Kunreuther here today to help us hear about his work. So Scott, on that note, could I hand back to you, please?
Perfect. Thank you very much, Lauren. And now I'm pleased to introduce today's featured presenter, Dr. Howard Kunreuther. And I believe all of you have some information about Dr. Kunreuther's background, so I won't go into detail except to remind you that he is the co-director of the Wharton Risk Management and Decision Processes Center at the University of Pennsylvania. And with that, I'd like to save as much time as possible for Dr. Kunreuther's presentation. Howard?
Thank you very much, and thank you, Lauren. It really is a pleasure to be here today, and thank you for the warm introduction and the description of HIBAR, Lauren, and Scott, your comments, because I do think that this is really a critical time for us to be thinking about the kind of work that HIBAR is actually highlighting and trying to promote. And so I'm delighted to be part of this discussion, look forward to your comments, and I'm going to be talking about the issues that Lauren highlighted in his introduction to my talk. And I'll focus really on one of the hazards that we have been focusing on, the National Flood Insurance Program. And as you can see as a subheading to this, how psychology and economics can be brought together to inform and drive policy. And that's, I think, a really important part of what HIBAR is doing, but it's a very, very critical part of what our Risk Center is doing, as well as my own personal interest. I am trained as an economist. I've often been called an irrational economist because I tend to work with people who really understand how the world is operating, psychologists and geographers and other social scientists. Behavioral economics is what we talk about today, and I think that's the appropriate term. And one of the people who I've worked with over the years is Paul Slovic, Scott Slovic's dad, and he's a psychologist who introduced me to a number of other psychologists. And a lot of the work that I'm going to be describing and talking about today has been based upon a lot of interactions we've had over the years. So let me get into what I'm going to be talking about right now, and I have to advance my screen. I'm going to start off with this slide, and you'll understand where I'm coming from. This is a photo that I took when I was at Leeds Castle in England about a year and a half or 2 years ago with my wife, Gail. And we were out looking at the surrounding area, and I saw all of these black swans there. And those of you who may know Taleb's book on black swans are supposedly very, very rare. And here I saw these large number, and I took this picture to highlight the fact that we really are seeing many more black swans today than we ever have in the past. We are dealing with a new era of catastrophes, and low probability events are higher than we would like to think them. And let me highlight that here with just a little slide to show you essentially how things have changed from 1970 up to 2020 in terms of natural catastrophes and man-made disasters and the events. I think the slide speaks for itself. And the question I think that's useful to ask is, why is this happening? And it's happening for several reasons. We have more urbanization in areas that are facing hazards, and I will be talking about the flood and hurricane hazard today, a huge increase in the value at risk, but we also have climate change, and climate change is here with us. We have to recognize that, and with weather patterns, et cetera, and sea level rise, things are going to get a lot worse in the future, and we have to be preparing for them now, and we're under preparing, and that's going to be a theme that I want to highlight here. And this is why I think HIBAR is so important, because we have to implement policies that are going to hopefully deal with this now before it is too late. Let me just show you just an example of how that plays out in one of the states, Florida in the United States. And if you look at the population from 1950 to 2020, you can see how that has grown from 2.8 million to over 21 million people today. And many of these people are living in areas that are very attractive on many levels, and they're moving to Florida for that reason, with beaches and swimming and whatnot. But it also happens to be highly hurricane prone areas, and as a result, you've had major damage in Florida from this, and it's going to get worse in the future. And cities like Miami are trying to struggle with what they're going to do. Now, just to take a look at this in terms of the exposure in these coastal states, New York, which has considerably more people than Florida, tops the list here, Texas, Florida. And if you talk about the damage that could occur to these areas and the exposure at risk, we're talking about $7 trillion in New York, and Florida, 4.2 trillion. And it goes all the way down. I think you're safer where you are out west than you are here, but all of these areas are really subject to major disasters. I want to focus on one area that I'll come back to with a little example. I know that HIBAR has an association with British Columbia, and if you look at flooding, which I'll be talking about, I was looking to see where there were floods, and Grand Forks in British Columbia had some of the worst flooding in 70 years in August 2018 with 4 feet of water. And we'll come back to that in a moment, but I wanted to point that out as an example of something you want to try to avoid, or at least protect yourself against in the future. So now what I want to do is to highlight the themes of what this talk is really going to focus on. I want to focus, now you've seen the new era of catastrophe, the biases in dealing with these low probability or extreme events. And we'll focus on that now, and then we'll get back, talk about how we modify the National Flood Insurance Program, which with our Risk Center has had a long-term association with, and not only in terms of dealing with agencies that Lauren indicated, but also trying to look at some research that will helpfully deal with this, and in fact talk about ways that we can address that through a behavioral risk audit, and then look forward very much to the discussion, and I'll pose some challenges and questions for discussion to end the talk. So let me highlight this, the biases in extreme events. Many of you may know of this book, and if you don't know about it, I would highly recommend it. It is written by Daniel Kahneman, who is a psychologist of high renown, who got the Nobel Prize in economics because his work has enormously influenced economics. And the book that has formed the basis for a lot of the research that we've been doing at the Risk Center, and I've been personally doing, is based upon the concepts of thinking fast and slow. So let me highlight them right now. Here are two systems that have been the focus of research by psychology and behavioral economists and other social scientists, but primarily psychology and economics over the last 50 years. And we have these two systems. that are highlighted in the book, System 1, intuitive thinking, and System 2, deliberative thinking. And System 1 is one that operates automatically, little or no effort. It's our intuition. We use simple associations, lots of emotions. Emotions play a role here. So does past experience. And there are a set of biases that I'll highlight in a moment, and simplified decision rules that we tend to use. Now, here's a point that Danny Kahneman makes, and that I want to make as well. We do extraordinarily well for the decisions that we are operating on and deal with on a regular basis. We know when to cross the street. We know when to stop and brake in our cars. Companies know their production processes. They have a lot of experience in this. We have a lot of experiences in preparing for our classes and doing a variety of things if you're a professor, or doing assignments and whatnot, and we know how to deal with it, and we do it in a way that really intuition and our own way of thinking is extraordinarily good at helping us to get through the day with the many decisions that we make. The challenge that we face and what we're talking about today is we have enormous difficulty on dealing with these low probability, high consequence events, like floods, like terrorism, like climate change, like anything that we don't have a lot of past experience with. And I'll use flood as the example, but it goes on technological hazards and on anything that we don't have the experience. And as a result, there are a systematic set of biases that influence and impact our decisions. What we would like to do more of is deliberative thinking, which is kind of what, I teach a risk class, and what I try to do is to say to make the trade-offs between benefit cost analysis. I'll talk about that today. There are trade-offs that have to be made. There are interdependencies and interconnectedness. We have to think about long-term strategies for dealing with this and we don't do a good job because of all the points that I just made, and that I think you're all can probably identify with. So let me now turn to how behavior might be triggered by some of these System 1 thinking. And that's what we'll focus on for the remainder of the course, and how to deal with them, which is, of course, what we're all interested in, and HIBAR is interested. How do we develop better policies for dealing with them, and how do we get to implement those policies? So first, myopia. We focus on short-term behavior, horizons. And let me highlight that by saying, when we have to make a decision on protecting our house against a flood, there are some fairly high costs associated with that. And we would like those benefits to materialize immediately. And we want to make sure that we don't expend the money, and we're very myopic, but this is for the length of a house. So it could be for many, many years, but we are myopic. Amnesia, we forget the lessons of the past, and we bury our heads in the sand where perhaps we shouldn't be, and we forget past disasters and decide not to undertake measures. Optimism. A black swan appears here because of the fact that it's a low probability event. So we say, this is below my threshold level of concern. I'm not even going to worry about this. So we have that as a bias. Another bias is inertia. We want to maintain the status quo. We don't want to change. We're very happy with what we're doing, and we're uncertain of what happens if we do change. So there's inertia that is a part of our behavior. Simplification. We often don't worry about more than one or two factors. And when it comes to things we're talking about today, we're talking about risk. And so we're talking not only about the likelihood of something happening, but also the consequences. And sometimes we only focus on one of those dimensions. And finally, herding. We look to our neighbors, we look to our friends, we make our choices based on what they do, but they may not be any more better informed than we are. And so we all sort of go together as a herd, and that causes a lot of problems. So these are some of the behaviors that we're talking about. Now, I'm going to highlight this briefly with an example here of the Lowland family. And they do reside in Grand Forks, as I indicated, we would come back to. And they're considering whether they want to invest $500 in making their house safer against the floods that you saw, so it's less susceptible to water damage. Now, the experts have estimated that the chances of a flood affecting their home is 1 in 100. If it occurs, if they flood proof, they'll save $27,500. And this is based on some realistic data. So I'm not just making that up, although I am making it up for Grand Forks for this example. But we'd have to get good data on Grand Forks on what the likelihood of these floods would be. But here's the point with respect to an issue that Lauren was referring to, insurance. They could purchase insurance. And if the insurance premiums reflect their risk and they have to pay a premium, it's going to be reduced by $275. Why is that? There's a 1 in 100 chance of a flood occurring next year. They pay an annual premium. They save $27,500 if they undertake that risk, and they save $250. So that's essentially the problem that we're talking about. And the Lowland family has been thinking about this. They've recently moved into the area, let's say, and so they haven't had experience with the August 2018 flood. And here is some of their responses. Myopia. They're not going to look at the long-term benefits I mentioned of making the house safer. Amnesia. The damage from whatever flood they heard about or learned about, or maybe even partly experienced if they happen to live there, is faded from memory. Optimism. The likelihood of damage is so low, 1 in 100. Why worry about it? It's below my threshold of concern. Inertia. Why change from my current behavior? We're unconcerned with future damage from floods. Simplification, no attention given to the consequences. The flood is the likelihood is so low. Why worry about anything that's going to happen? Hurting, not another property in the area that they know about has invested in floodproofing. Why should we do it? Okay, now let me now turn to the issue of policy and how we are going to kind of deal with all of those issues now. The problem with flooding is that it is a challenging problem. And I want to just talk about the National Flood Insurance. I'm backing up for a moment to this slide. So I tell you just for a moment what the National Flood Insurance Program is in the United States. In the United States, flood insurance is marketed primarily by the federal government. There is some private insurance, and we're actually working with a company I'll refer to at the end of the talk that is marketing flood insurance, but 95% is the flood insurance from the Federal Emergency Management Agency that Lauren mentioned, and that we've had a lot of discussions with on this particular program over the years. It was formed in 1968. So it's been there for quite a number of years because the private insurers refused to offer flood insurance. And as a result, the government got involved in it. And I'm going to describe right now some of the features of that program with the following slide. There are a number of things you have to think about when you deal with the flood insurance program and interdependencies. You have to think about insurance and the maps that have to go with it. They have to be excellent maps, and sometimes and that's what FEMA is working on now. I'll say a little bit about that later on. You have to think about floodplain management. You have to think about land use planning. You have to think about building codes, but you also have to think about affordability and what's going to happen to low-income people who can't afford a flood insurance premium that might be risk-based, which is what your premiums you'd like to have. And so all these things come together with respect to how you have to develop a program. And FEMA has been struggling with this. And how do you reduce the risk by getting people to invest in flood protection beforehand? How do you manage it? How do you insure it? And how do you deal with these issues? So these are the issues with the program. Now, we have a couple of guiding principles that have guided all the research that we're doing with respect to the insurance portion of that. And the first principle that I'd like people to think about is that premiums have to reflect risk. And the reason they have to reflect risk is because it tells people how safe they are, and it also encourages people to mitigate their homes because they'll get a premium discount. If a premium is highly subsidized, that won't happen. But if you do that, you have to have a second principle, and that is you may have to require insurance in hazard-prone areas because people aren't going to buy it for the reasons I'm telling you. And if it's flooded, they may not be even designated and required to buy it. And third, you have to deal with affordability, fairness, and equity. But you shouldn't do it with insurance. We propose vouchers, but we're saying you give a voucher, only if the homeowner takes steps to mitigate their property if it's cost effective and they can afford to do it. So that's what we're going to talk about now. So I'm going to talk about that and highlight how one might proceed. You encourage investments in loss reduction measures by having good maps by FEMA, mitigation loans, so you spread the cost of the making the upfront cost over time. Give the premium reductions. Give them vouchers. It covers the premium and a mitigation loan. You have to invest in the cost-effective mitigation measure, but we'll give you a loan to help you do that and make it affordable. And flood insurance get tied to the property, not the homeowner. This is a paper written a few years back with my colleague, who's executive director now of the Risk Center, Carolyn Kuski, and we addressing affordability for dealing with the program. Now, here's where I want to sort of move as I try to tie things together in the last set of minutes. My colleague Bob Meyer and I have written a book called The Ostrich Paradox: Why We Underprepare for Disasters. I'm not going to ask you why we called it the ostrich paradox. I will tell you because we didn't know this ourselves. One of our colleagues told us this. Ostriches supposedly bury their heads in the sand, but they don't. They are very smart. They put their beaks in the sand. They can run fast because they can't fly. They protect their young. They do all the right things. We bury our heads in the sand. And so what Bob Meyer and I were proposing, and we've been trying to implement this with FEMA and with other agencies, is a behavioral risk audit, saying, and a policy incubator, the idea of implementing policies. And the idea basically is a very simple one. It's a simple one to say, we are not going to change our biases. We live with these biases. Let's try to address them in a way that we can get to more deliberative thinking. And that's what I want to talk about now. So here are some of the biases that we talked about. Myopia. Well, how are we going to deal with that? Long-term loans coupled with insurance premium reductions. I'll illustrate that in just a moment. Amnesia. Think about contracts of insurance that are multi-years. We've been trying to work with the insurance industry, not successful yet, so people don't cancel their policies if they have no claims and say this is a bad investment, which it shouldn't be. They should celebrate not having any claims, but people don't do that. Optimism, I'll talk about that in a moment. Stretch the time horizon. So instead of talking about 1 in 100 years that there's going to be a flood, talk about it as greater than 1 in 4 in the last 25 years or greater than that, and even stretch it to 30 years. And it's the same probability. If the hazard is independent from 1 year to the next, it's even greater than 1 in 4 if there's climate change. But people pay attention to 1 in 4. They don't pay attention to 1 in 100. Same probability, different framing of the issue, choice architecture. Let me talk about the investment for the lowland family on our first myopia. They could spend $1,500 with respect to that, but they only could save $275 each year. And so if we look at a little graph on the benefits over time, at a 10% loan that they at a 10% discount rate, the benefits are not high enough over the first 8 years to cover the cost. And they're going to say, we're myopic. We want our benefits back in the next 2 or 3 years. They're not going to do it. So what are we going to do for the lowland family? We'll suggest the following. You take the flood-proofing home, and the benefits are $275. Give them a 20-year loan tied to their mortgage. At a 10% rate, that's high. It'll even be lower than $145. The reduction in their premium is $275. They only have to pay $145 for the loan. They save $130. That's a no-brainer from their point of view because of the fact that they actually are saving money each year, so they deal with myopia. Inertia. Add flood protection to the policy as a default option with the ability to cancel it. Simplification. Focus on the consequences. Give them worst case scenarios rather than the low probability, and tell them what the probability is, but do that. Herding is really challenging. Give them seals of approval on homes that are well designed. Maybe you could create a social norm, but you may have to have building codes and other things to deal with that. Let me tell you about one other example that we utilize with respect to this. We are working with an insurance company right now on a policy that they had that they were trying to market for $35 extra on a private flood insurance policy. You would get $10,000 if you had a flood, and you would use the money to make your home safer. So you would mitigate and reduce the losses. Are they likely to take up the coverage if it is included as a default option? That's what we were interested in. They were offering the coverage as an add-on to the policy, and few people were buying it. And they were concerned, and they came to us, and I was working with a colleague of mine who's a postdoc now, who's at the University of Chicago, Serene Chowdhury. We were working on this, and we were also working with several other people. Lynn Cornell Price is working on that as well, not right now at our center. I want to highlight the roles that we were playing. Here's what happened. Very simple. 15% of the people bought this when we said you can buy the policy if it turns out it's added on. When we told them we're going to put this policy on your flood insurance, and if you don't like it, just say you don't want it, opt out of it, 40% of the people kept the policy. So this is another example of how you can use essentially default options to deal with this. That's choice architecture. And you have incentives in many ways, like the long-term loan. And maybe you can deal with this by correcting these biases.
Excuse me, Howard, we have about 2 minutes.
Okay, excellent. I'm going to end with the following kind of notes. How are you going to deal with all these issues? Well, the most important ways are novel approaches. Let's deal with a policy incubator where you work with people to get an idea, do data analysis, convene stakeholders, bridge gaps, stress testing, and then evaluate a policy. We can talk more about that in the questions if people want to have it. And finally, some questions and challenges and questions for discussion, and I will end on that note. What steps can be taken now to develop hazard maps that more accurately assess the risk of flooding? How could the impacts of climate change be incorporating in designing flood insurance to encourage the investments in better measures, adaptation measures? How do we communicate the risk better to deal with floods? How do we deal with the affordability issue? These are issues that FEMA is facing, that we are all facing, not only for this risk, but for the pandemics and for other risks as well. My conclusions, very quickly, we're in a newer era of catastrophe. As HIBAR would highlight, we need key stakeholders to agree on the importance of a lot of policy tools, investing insurance, loss reduction measures, other ways to act now. The behavior risk audit we'd like to suggest may be a way to get started to increase deliberative thinking and convene the parties together. I will end on a note of a cartoon. This is one way to deal with flood insurance. I don't highly recommend it. And one of my colleagues from the state agency gave me this, Larry Lawson. Jerry looked at flood insurance, but it's too damn expensive. Well, that maybe you don't need insurance, but I'm not sure you want to raise your couch to that level. And here's a little note just for those of you who are interested. Here's the ostrich paradox. To end my talk and just say, if you're interested in more on how we deal with these issues and some of the biases, this book describes it in a little more detail. On that note, I hope I've done that in the 2 minutes, Scott. I turn that back to you.
Wonderful. Thank you very much for that excellent overview of your work, Howard. I wonder if you can unshare your screen as we head into the Q&A.
I would be happy to do that. Thank you very much. I will stop sharing.
Perfect.
You now can see me full-fledged.
That's perfect. Perfect. Thank you so much. And let me remind the attendees that you can place questions in the Q&A box. But first, I would like to begin with maybe a couple of the questions that we had prepared ahead of time. So, Howard, I wonder if you could speak a little bit further about the role of societal partners in government, in the insurance industry, and perhaps in other sectors in your research, particularly in cases where you've had deep collaborations with non-academic researchers who've taken a co-leadership role in your projects. What have been some of the advantages and challenges in working with collaborators who may have slightly different objectives than are typical of university-based researchers?
Well, thank you for that question, Scott, because it is central to at least what we're trying to do. Let me indicate that our principal collaborators in these issues, as Lauren mentioned, are the insurance industry and federal agencies like FEMA particularly, but we've also worked with HUD and we work with other federal agencies. Let me talk about the insurance industry first. I think insurance is a key policy tool for dealing with risk. They have challenges. Partly the regulators do limit them with respect to sometimes saying that they have to subsidize risk. But the big challenge, I think, and they recognize it as all of them, they have a number of biases that we have to sort of deal with, and we've been working with them on that. One of the hardest challenges is that when events, they know that before events occur, they may not take protection. They never charged a penny for terrorism coverage before 9/11. And that was a little surprising to us because of the fact that they had the Oklahoma City terrorism and the World Trade Center of 1993, and afterwards they refused to offer it. So we have been working very closely with the insurance industry to highlight the fact that you really have to not only think about these risks and think about the notion of doing or what the actual challenges are, even if you don't experience a disaster, but also to convince people that the best return on an insurance policy is no return at all. Don't cancel your policy after you haven't had a loss. And so we are working with them on even trying to figure out ways that you can give people some benefits at the end of the year. For example, give a little chit if you haven't had a loss. When you renew your insurance policy, tell people to go out to a restaurant and we'll help pay the $50 for a dinner or something like that to celebrate the fact you haven't had a loss. So there are strategies that we've been working with them. With FEMA, we have worked very directly with them, with a lot of other people, and they used to be presenting the flood risk as 1 in 100. They now present it as 1 in 5, a great lower than 1 in 4 chance if you have over the 30-year life of the mortgage, and think about changing on their property. And as you already know, we've worked with the flood insurance agency with respect to how they're dealing with marketing a product that will hopefully reduce losses. So those are some examples of that.
That's very helpful, and we have some good questions in the Q&A box, but I wonder if we could just stay briefly a little bit more with the partnership question. And I wonder if there's any advice that you would give to a junior faculty member who would like to develop a collaborative relationship with this type of non-academic partner. If they haven't developed such a collaboration before, what are some concrete things they can do to engage with potential partners?
I think the most important thing is to find out what is of great concern to the partner. What are they interested in studying? And I think we have found that with all the insurers, they are particularly interested in studying ways to not only reduce the risk through insurance, but for example, through community actions like well-enforced building codes as an example, and the Institute for Business, Home and Safety is another agency. So find out what they're interested in, listen to them and learn. And then the second thing would be to try to figure out how what they're interested in deals with the kind of research that you are interested in, so you can begin to try to pull these two together and then try to bring them together. The other thing is to try to make sure that you understand, that they understand you're not, that they can trust you, that you're not trying to frame them in any way, that they will have a chance to look at your research first, comment on it, not to say you can't publish. We have a rule at Penn and most universities, you have to publish the research you're doing, but give them an opportunity to comment and interact with them and have them constantly involved with the project. And that we have done with not only insurance companies, but I think the flood insurance agency example I gave at the end, which is a very recent one that we just published an article on stretching time horizons, which he also worked with them on. They were very, very integral partners in the research we were doing.
That's very helpful advice, Howard. I have a few questions in the Q&A box that are really related to the kind of intellectual core of your work. One of them is how can we use stories and images besides statistics to make consequences come alive with the emotional meaning needed to motivate protective actions?
I think anecdotes and stories are absolutely critical. And I think you need data to back up the stories so that you don't say that this is just another example, but stories make the, I will tell you just the history of our book, The Ostrich Paradox. Bob Meyer is the first author of that book, my colleague, co-director of the Risk Center, because in that book, he has an enormous numbers of wonderful stories that are part of that book that highlight that. And Bob and I have worked together for years, but the idea of using stories and whatnot, I will give Bob Meyer a lot of credit for helping me to be part of the notion of doing that. So I think stories do two things. First of all, they highlight a point that everyone can identify with. And secondly, they also lead into more generalizations from those stories to a variety of other things that one can actually then utilize from the basis of data. And that's why the notion of a story of people not paying attention to a 1 in 100-year event, but paying attention to a 1 in 4 would be an example of a story that one could tell.
Here's another question specifically related to your example of the lowlands. What role does the knowledge and past experience of seeing government disaster relief programs for those uninsured or underinsured after a natural disaster play into the decision of making such investments? Does that make the calculation different for the lowlands, having previously seen the way these disaster relief programs work?
It may be what the lowlands are thinking about, but it may not be what actually happens in practice. This is an excellent question, because the one thing that we are saying in all of our research is you have to link up ex ante to ex post, before the disaster and afterwards. If people know that they are going to get long-term big benefits from disaster relief, they're not going to mitigate in the same way that if they know they're not going to get it. And the fact of the matter is that back in the late 1960s and in the 70s, when we were even starting our research with respect to natural hazards, there was extremely liberal relief. Today, that is not the case, but there's an image that it is that people are going to get relief. So two things happen. They do exactly what the question is raising. People say, oh, I'm not going to, why should I protect myself? Someone is going to bail me out. But in reality, they're not going to be bailed out. And so I think you have got to make sure that there's transparency and that people understand that that people are not going to get the relief that they think they're going to get. And it's up to the federal government to also promote the notion that disaster relief is not something that will be given to people. They may get some help, low interest loans and whatnot, but it won't be the kind of help that should discourage them from investing in mitigation measures.
Howard, here's another question about an additional factor that might dampen people's enthusiasm for additional insurance regarding floods. For a risk like floods, which will potentially affect a large number of people in an area, is there a risk that an individual will assume that it will get that they will get some government assistance in the event of a flood? In other words, is there a sense that there is already government insurance available?
And the answer again comes back to the previous question. The reality is that you do have special legislation that has gotten passed after major disasters, but recently the special legislation has helped cities and communities to deal with this, but not necessarily helping the individuals. And so we have the same problem that people may think with a large disaster there will be relief, and there may be some. But what FEMA has done, and it's a very good thing that they've done this, is to say if we're going to give you any disaster relief, you have to buy insurance. And that's the condition for doing it. So they tie the idea that if we give you something, they have to give something in return, much in the way that what Carolyn Kuski and I were talking about the affordability issue. We said you should mitigate. If you're going to get a long-term loan, it'll reduce the cost to the government because your premiums are going to go way down. You won't need as much money for relief from affordability, but you're also protecting yourself. And so I think there has to be that tie-in in some way to avoid the kind of both of the questions that have been previously asked.
Thank you. And here's another question that asks that we circle back to the issue of collaboration, which is such an important aspect of HIBAR research. One of the unique aspects of your work is that you collaborate both with government agencies and with the private sector, the insurance industry. And the questioner is wondering whether it requires a different type of collaborative strategy or approach to work with the private sector versus a government agency, FEMA versus insurance companies.
Well, I think the answer is that every agency and every individual has their own values and agendas, and FEMA has a different agenda than the insurance company's agenda. Our role at the Risk Center to answer that question is we like to bring them together. I think one of the things that HIBAR is trying to do and that we try to do at our Risk Center is to say you have a number of different stakeholders. Each of them have their own values and agendas. We will try to deal with in a neutral forum without the idea that all of a sudden, without the press there, the idea of discuss what are appropriate strategies that are actually going to be beneficial to the groups that are there. How can they then propose to work together rather than the idea that they're working on separate issues? It doesn't necessarily mean that there won't be a specific element with respect to where insurance plays a role. And let me illustrate that what I would say with respect to problems we're facing today, not only with the pandemic, which is an area that we're all working and concerned about, but with other elements like the flood problem or catastrophic losses. Insurers are going to be very, very reluctant to deal and provide coverage against a risk like flood unless they know that they have the degree of freedom from the regulators to charge a risk-based premium. Because if they're forced to subsidize the premium, they're going to lose money because they're not going to be able to collect enough money to pay for the losses. But if they're going, so the regulator has to enable them to do that. But having said that, you do need a federal government to come in to say, we are going to help the low-income people living in flood areas who cannot afford that, as I talked about earlier. So they have to play a role there. But the federal government also may have to play a role, or the states, if there's a catastrophic loss that is so large that if the insurers are going to insure all of that risk, they would go become insolvent and declare bankruptcy as a result of that. So you need that protection. So you want to develop a system that brings them together, that everyone feels there's a role to play. The insurers might have to pay a premium to the federal government for their protection against the catastrophic loss. And that's a legitimate thing, just like we have reinsurance today to pay the insurers if they have a large loss, the federal government. So you need that partnership. You need them to come together. There are different agendas, but if you hear from each of them, you might be successful.
Thank you. So let me turn to another aspect of HIBAR research that quite a few of us have been wondering about, and this has to do with measuring societal impacts of research that is occurring based in academia. The societal goals for certain kinds of HIBAR research are rather concrete and specific, new medicines, better technologies, but the goal of improving public policy can sometimes seem diffuse and elusive. How do you measure effective societal impact for the kind of research you do?
Well, that's I think right away, one of the objectives you'd like is for more people to have insurance. And if you can show that somehow the process of trying to get this across, that they are buying insurance voluntarily because you're highlighting reasons to buy insurance so that they don't say that's a bad investment, that's a measure. Mitigation would be another measure. How safe are the homes with respect to the hazard? Climate change is a very, very important area. And let me highlight that because we actually are doing some research on that right now. We are trying to figure out how we can get people, particularly in areas and where you're living, and the Western areas are even better than the East, to invest in solar panels on their house and solar in general. And so we've been asking, what can we do to deal with that? And can we be successful? And this is a current experiment we're interested in. I'd be happy to talk with others about that. And I think we would do this in a couple of ways. And the success will be, are people going to behave the way we would like them to behave? One is to show that if they are going to install solar on their house, they may actually save more in electricity costs than the loan that they would have to pay back. You'd want to have a long-term loan to the company that is providing the solar, or in some fashion, the way they would be actually paying for that. And so that right there, they see essentially the positive benefits associated if you can show that. California would be certainly a good place to do that because they've got a lot of sun, and Oregon. Other places now, solar is highly competitive. So one way is to begin to say, and can you be successful in doing that? But I want to highlight something that we would love to implement, and since you talk about and would love to see happening, and it has two elements associated with it. Here's the basic idea, and I'll use you and me, Scott, as the example. We're living in an area, you have installed solar panels in your house, you have, and I have not. We are both told in our community, everyone is going to get a ticket to a lottery. And we are going to draw a number from the lottery a couple of weeks now, and you will get $1 million. Someone will get $1 million of some prize. So they draw two numbers from the lottery. I've got a ticket, you've got a ticket. Your number comes up, you win a prize. My number comes up, I get nothing. I have not put solar on my house. And we are now doing it. My colleague, Katie Milkman at Penn, I've talked with her about this, and she has implemented in Philadelphia a regret lottery for vaccinations. Anyone who gets a vaccination will get a prize. Anyone who doesn't will not get a prize. So that's an example of how one uses some of our biases and some of our notions to get people to adapt things. We would love to implement that. And the measure would be, will it be successful as a policy tool for you to speak to actually getting people to get vaccines, which is something we're struggling with in everywhere around the world today, and also to install solar to deal with climate change. So I thought I'd like to link pandemics with climate change as a response to that question.
Yeah, thanks, Howard. And maybe one final question before we give you a chance to offer some final messages about your research vis-a-vis HIBAR. And it's obvious listening to you that you've maintained tremendous excitement and enthusiasm for this research, which you've been at for a few years, and more than a few. And so one question is about the experience of the typical time frame for these projects, and has it been challenging to maintain enthusiasm of the team, your entire team or various teams that you've put together for projects that are a long haul to see meaningful policy impact?
Time frame is long. I mean, we haven't implemented things we've thought about, and Paul Slovic and I have talked about that. Your dad and I have talked about that, how we can implement things related to a whole set of issues. And he's been working on nuclear war and genocide and a variety of things. And we've been working on with respect to issues like hurricanes, floods. We're working on wildfire right now in California. How do we get people to mitigate? How do you get communities? It's a long, long process. That's number one. This is not, and we tell everyone, this is not a 2-week, 6-month project. You have to bear in mind, but there are short-term rewards constantly. You're interacting with people, you're interacting with your colleagues, you're sharing results, you're doing experiments, you're learning. So the most important recommendation I would give, having done this for more than a few years, do something that you love. Do something that you feel you have real knowledge and you're interested in, and that you can get other people interested, and work with people who really like what you're doing, and build up long-term relationships relationships. So you share ideas, even if you're not successful. You learn from each other, you learn from your experience, and it's a constant process. And so I think if one can think about myopia, we all want short-term rewards. You get the rewards from interacting. You get the rewards even if it turns out that you have an experiment that doesn't work well. You learn enormously from a failure because of the fact that it helps you in the next thing. And I heard a comment from Kenneth Boulding, who was a very famous economist, passed away a few years back. And it'll take me back a number of years, and people may or may not even understand that, but I'm going to say it and explain it. He made the comment, he said, if Ford had not made the Edsel, which they thought was the prize car, the best car, it was a total failure. It didn't work, no one bought it, etc. But he said, if Ford had not made the Edsel, they would never have made the Mustang, which is probably the car that is one of the best-selling cars of all time. So you probably look up the Edsel and the Mustang. And I always have remembered that, and I've told that to my class. So we do learn from our failures and then try to celebrate, and then just recognize that life is long. It's shorter for me than for you and for some of the people who are here. But the fact is, you have to plan on a long-term horizon, but get short-term rewards.
Thank you. You've already started giving some of your key secrets to
I
your
was going to
research.
say, these are some of the things I would say at the end as well.
Yeah.
And I don't want to run out of time, but you can.
We are, not to steal your thunder, we are almost at the end of our hour, but you have a few minutes if you'd like to offer some essential takeaways from the HIBAR dimensions of your research.
Yeah, well, I think the thing that I have found most useful from my own research, and I think hopefully for the Risk Center and of the colleagues, is have a set of principles that you feel are important for what you are doing. And look at those principles and whatnot in guiding one's own research. I put 3 principles down for some of the research you're dealing with. And also the notion of trying to have a broad framework for what it is that you're doing, so that you say, this is a particular project, but it fits into a broader set of ideas that hopefully will intend. And I will say that the pandemic has changed my life in a way that I was totally unexpected. And Paul Slovic, your dad, and I wrote a paper together coming out of the pandemic on how it could benefit climate change, because it has forced us to all think about the world in a different way. And that, I think, is really, really an important element to say. Can we take advantage of things to think about that? And then try, and this is HIBAR, try to use a recent event, which when people are going to focus on, like the pandemic, to think about events that you want them to think about, like climate change. And maybe you can do that in such a way. So take advantage of the biases that we have, myopia being one of them, and saying, look, this is happening. The key bias I would highlight with respect to what I just said is a bias that Kahneman and Tversky came up with, which is the availability bias, which is that the salience of an event often influences how one makes decisions and often influences the probability judgments erroneously. But the point is, it's salient. So people think about what they can do after a hurricane rather than before. And the one little example I will give you that we did on a survey a number of years ago, we found out, we asked people what they thought the likelihood of another earthquake would be after they had one in California. And they said it would be lower than before. But they said, they're going to buy insurance now. And we said, that's really interesting. You're going to be insurance, and you thought that the probability is lower, but you didn't buy insurance before. What's going on? So that's the availability bias, the past experience. That's when people take action. If we cannot highlight that now, we're never going to get it later on. Yeah. And dealing with legislators and whatnot, take advantage. The pandemic has forced us to think about that in a way that we haven't. I think I better end there now, Scott, because I know we're tied out. I really enjoyed the questions and interacting with you on these issues and with others. I look forward to continuing.
Thank you so much for that terrific talk, Howard. And thanks to everyone who attended today's webinar. but we would like to encourage all of you to stay tuned for announcements of future events in this series. Thanks a lot, Howard.
Thank you. Bye.
Bye-bye.